Let me double check to make sure our audio is good to go. Last time somebody said it was muted, so let's make sure we're good to go. All right, we're good to go. We're good to go. Like, share, and subscribe, guys. Welcome to the live. Let's level up together. Motivate some more people. Let's go. So, option trading for complete beginner, step-by-step guide. So, if you wanted to learn about option, this is the video for you. All right. So, with that being said, guys, let's get into it. Remember to like, share, and subscribe. Let's go. Get it out there. Help some other people. So the basic, right? Options are financial contracts, right? That gives you the right, but not obligation to buy or sell an underlying asset at a predetermined price by a specific expiration date, right? So you want to think of them like an insurance policy or reservation ticket for stocks. So you pay a small upfront cost for the flexibility to act later. So, for example, right, if you have Tesla, that's one stock is $400. And if you choose option, right, if you go to get an option contract, it depends on the expiration date, you could get an option contract for say $100, $50, and so on, right? So way cheaper than if you just get a certain particular stocks. Like, share, and subscribe, guys. Welcome to the live. Let's get the video out there. Motivate some more people. Let's go. So, unlike stocks where you own a piece of company, right? Options are derivatives. So, it meaning that they derive their value, right, from an underlying asset, um, like stocks, ETFs, or indexes, right? Like, share, and subscribe, guys. Welcome to the video. Let's go. Let's go. So this is a unique characteristic. This unique characteristic allows traders to control larger positions with less capital, right? While managing risk strategically. So that's one of the reasons why a lot of people that insist once they do option or they look at option, you realize they could make a significant amount of more money um, uppo- versus when you own a stock over long term. Yes, you can make a lot of money, right? But in the short term, you could make a significant amount of money with option because how it just move, right? A stock could move. Welcome to the live, guys. Welcome to the video. Like, share, and subscribe. Let's get this video out there. Motivate some more people. Let's go. So unlike stocks, right, where if it moves $1, it's the dollar, right? You make $1. An option, if it moves $1, it could be a significant amount. In options, because there's different things which we'll talk about in a little bit, like theater, delta, all those things, right? So let's continue. Um, Welcome, guys. Welcome to the video. Like, share, and subscribe. Let's level up together. Get this video out here. Want to get some more people. Spread the word. Let's go. So why trade options, right? What are the benefits and risks? So option trading open up strategic possibilities unavailable traditional investing, right? So understanding both the advantages and potential pitfalls is essential in diving in, right? So we definitely want to understand those things before we just get into it, because you could make a lot of money, you could lose a lot of money. So we definitely want to make sure that we're in, the right place. So you want to leverage your capital, right? So you want to control large positions with relatively small amounts of money, right? So remember, guys, like, share, and subscribe. Let's live up together. Let's get this video out there. Let's educate some other people. Let's grow together. Let's go. So options allow you to participate in price movements, right? Without tying up significant capital in stock purchases. For example, right? If you were going to get one Tesla, right? And if Tesla is worth $400, right? If you get two Tesla, it would be about $800, right? But an option, who's that? Javon, Javier, what's going on? Hi, what's up? Welcome to the live. Welcome to the video, guys. Like, share, and subscribe. Let's go. Glow Budget. Hi, what's going on? Welcome, guys. Welcome to the video. So, oh, Matt Lover. Hi, what's going on? Welcome, guys. Welcome to the video. Like, share, and subscribe. Who's that? Javier. Oh, yeah, let's go. Let's go get this video out there. Help some people. Let's grow together. Lover, hello. What's going on? Welcome, guys, to the video. Let's go. So, there's a like. I thank you. Appreciate it. Thanks for the like, guys. Let's go get this out there, guys. Spread it, spread it. Let's grow together. Um, so I was saying, as a like, if you get two tests, if you get two tests, right, at say for example, $400, that would be about $800. But in option, right, you have the right and obligation, but not obligation to buy or sell, right? So you could get two Tesla you could get the right to own 100, to buy or sell about 100 shares, because in option, one contract is 100 share, right? So when you get that, it could cost you like $100, $50 or more or so. It depends on expiration that you get it, right? But in stocks, it would cost you a lot more to get it. Um, so why trade options, benefit and risk? So it portfolio protection, right? So you hedge against potential losses in your existing investments, right? So option can act as like an insurance, so protecting your portfolio during market downturns. Even though we're going to talk about it something later where you can make money even when the market is going down with options. So, but it's coming up soon. Like, share, and subscribe, guys. Let's get this video out there. Let's motivate some other people, educate. Let's go. All right, let's go, guys. So profit in any market, right? So you could generate returns whether markets go up or down or sideways, however it goes. So options provide flexibility to profit from various market conditions and volatility, right? So an important thing, if you guys are taking notes, is write this down or highlight it right now. Important risk warning, right? Option can expire completely worthless, resulting in 100% loss of premium of the money you paid, pretty much. So this market requires understanding of discipline and careful risk management. Never invest money you cannot afford to lose, right? How do I know that? When I first started, I bought a option contract and it went up and I kept it in there hoping that it was going to go up. Next thing you know, it expired completely worthless. So I made $0 from it. However, I was willing to lose the money that I invested. So, but hindsight right now, you could just do paper trading where you're trading with fake money. But we talk about that soon. Like, share, and subscribe, guys. Let's live up together. Let's go. Let's go. Get this out there. So some key terms you want to know when you're doing option trading is you want to master the option terminology in your first step, right, toward confident trading. When you first start, it may sound gibberish. I know for myself, it would sound like a foreign language, so I didn't really understand it too much. So the fundamental concept form the language of the options market, right? So for example, you have strike price, right? Strike price is the predetermined fixed price at which you can buy or sell the underlying asset, right? So this is locked in when you purchase the option contract, and it doesn't change regardless of market movements, right? The next thing they want to know is premium. So the premium, the upfront price you pay, that's pretty much what it is. Upfront price you pay to purchase an option contract. So this is your maximum risk, right? Whatever you're willing to risk during your trade, that's pretty much your premium. So the most you can lose if you option if the option expires, worthless. That's what the premium would be, what you pay for it. So premium are influenced by time, volatility, and distance from the strike price. So now let's go to um, you know let's go to in the money versus out of the money. So basically, I don't know if you guys ever heard of the in the money, out the money, if you ever look into option, but um, the in the money is the option intrinsic has an intrinsic value, and the call if it's a call, it's above the strike price, and if it's a put, it's gonna be below the strike price, right? So out of the money, the option has no intrinsic value and currently but may gain value before expiration. So then you have another one where it's at the money, where it's pretty much where the the strike price, the call or put is right, at the strike price. So you're at the money. Another term, like, share, and subscribe, guys. Let's level up together. Let's get this video out there to and educate some more people. Let's learn together. Let's grow together. Let's go. So another thing, guys, is expiration date. So that's the deadline by which you must exercise your option or let it expire, right? So options are time sensitive things, right? Instruments. And all contracts have a finite lifespan ranging from days to years, right? So you could do option contracts where it expire within a day, or you could do an option contract currently. As I'm recording this, you have option contract expire all the way up to about 2 years. So, those are some terms right there. So how does an option work, right? A simple example. So let's break down some scenarios to illustrate how option generate profit, and the example demonstrate both call and put option in action, right? So just before you go on to this, let me just explain what calls and put is. Calls is pretty much betting that the stock is going to go up, and put is betting that it's going to go down. So either way you go, is you can make money, right? If you think that the stock is going to go down and it goes down, you can make money. If you think that's going to go up and it goes up, you're going to make money. Like, share, and subscribe, guys. Let's motivate some more people. Let's go get this video out there. Let's go. All right, so for the call option example, right? You can buy a call option for, say, Tesla, right? With $50, right? With a $50 strike price, and you pay like, say, $2 per share. So that would be about $200, $200 total for 100 shares, right? The stock price rises to $60 before expiration, right? So now instead of $50, it's $60. So you exercise the right to buy at $50, then immediately sell at $60, right? So you buy it at 50 and you sell it at $60. So the profit would be $10 per share minus the premium. So that would be $8 per share, or $800 total. So instead of $200 total, it'd be $800 total. So in other words, right, if you buy a stock, an option contract, and you say you pay like what this is saying, say you pay $50 for it, right? And the contract moves, the contract moves, the stock moves at like $1. You could make a significant amount in option world, versus just making $1 on that one stock, right? Um, so we definitely want to um, make sure we're leveraging right. So on the put option example, right, you buy a option contract for, say, Apple, right, for $50 strike price, and it's $2 premium, $200 for 200 shares, for 100 shares. Um, and the stock price falls to $40 before expiration. You can buy shares at $40 and exercise your right to sell at $50, right? So profit, you make $10 per share minus $2 premium, so $8 per share, so $800 total. All right, this example is interesting. But like, share, subscribe, guys. Let's go. Let's level up together. Let's go. So open up your option trading account, right? Open up your option trading account. So open up your option trading account. Before you can trade your first option, you need to set up the proper trading account, right? Um, the approval process is more involved than opening a standard brokerage account, because option trading carries additional complexity and risk. Like, share, and subscribe, guys. Let's go. Let's get this video out there, motivate some more people, and let's learn together. Let's grow together. So you want to choose the right broker, right, or brokerage account. Um, you want to select a company that is reputable, that offers option trading capabilities. You want to look for a platform with educational resources, you know, competitive commission structures, and some popular ones that you could look into are like Robinhood, Webull, E-Trade, Interactive Brokers, Charles Schwab, and so on. So you want to get a complete options approval. So you need to apply specifically for option trading, right? So once you create your brokerage account, you're going to have your brokerage account. It's going to say that you have a brokerage account. However, you need to specifically apply whichever brokerage you use. They have a section where you can apply for option trading, right? Um, let me put it right here. So basically, the broker, they're going to ask you about your investment experience, financial situation, trading objectives, and so on, right? So you want to be honest. Approval levels determine which strategies you can use. All right. So if you're not approved, you won't be able to do options. So just, choose the right option. Then answer to the best of your ability, and you'll be approved for option trading. All right, so like, share, and subscribe, guys. Level up. Let's level up together. Motivate some more people, educate them, and grow together. Let's go. By the way, if you guys want to, have accountability and learn these kind of things, financial terms, and learn to make money, all those good things, I invite you to join my community. It's in my description, and I could help you guys, guide you through this process, and help you guys make money. All right, so with that being said, let's get back to this right here. um, so you want to understand requirements and fees, right? So you want to familiarize yourself with margin requirements if you are going to use margin account, which means that you're kind of borrowing money to trade, which I wouldn't necessarily recommend beginners to do. Who's that, Mister? His turn. Hello, I'm watching a Western movie while holding President mother and a dog. Oh man. All right. Um, so welcome to the live, guy. Welcome to the videos. Like, share, and subscribe. So, yeah, we want to make sure that we are understanding the fees and requirements, right? So you want to review the fee structure, including per contract, commission and regulatory fees and assignment charges, right? You want to understand what the platform charges. Currently, it's not that much for Robinhood, based on what I know right now. And Webull, it's fairly priced. So I recommend doing your own research. This is not financial advice, so I recommend doing your own research. I'm just telling you guys these things right here. So as I was saying with margin account, you pretty much are borrowing the money to use the money, and if you unable to pay the margin account, it could be charged with interest and all those things, which can be not that good for if you're just trying to learn about option trading. And it also versus if you do a cash account where you only trade in the money that you put in the account. I think that gives a little bit more flexible move around, wiggle room, and you're less likely to, you're not gonna have, you only could trade what you put in the account, and you could trade unlimited amount of time versus margin. You usually have to have at least 25,000 at the time of recording this to trade. I think any time. I think you only get about three trips per three trades per 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 five per business day or something like that. Um, if I'm not mistaken, I believe that's what I haven't personally right now. I mainly trade cash accounts, so you you get about three trades. Let me just go here. Uh, let's see. Let me just double check it here. Make sure I'm giving you guys. I said I mainly trade cash account right now. Okay, so you could be designated a pattern day trader if you execute four or more trades within 5 business days, and those trades account for more than 6% of your total trades in that period. So, uh, if you want to be a non-pattern day trader, there's a specific limit on day trades if you do not reach the PDT, or pattern day trader um, threshold. So you need a minimum equity of about 2,000 not to use margin and must stay within your day trading buying power, right? So you must maintain a minimum equity balance of 25,000 in your margin account at any day-to-day on any day-to-day trade. This balance must be met before trading that day. If your account falls before that, before $25,000, you are limited to closing transaction until the balance is restored. So these are a limits when you could do margin trading versus if you do cash trading. However, you could leverage margin trading if you really know what you're doing to make more money than you actually take out. But as I said, as a beginner, it's kind of risky, right? Because if you lose the money that you borrowed and then you have to pay interest on it, that's going to be not good, right? Interesting. Like, share, and subscribe, guys. Let's go. Let's level up together. So we want to start with that being said, guys, at the beginning, we want to start with paper trading. So many brokers offer paper trading or simulated accounts where you can practice with virtual money, right? So it's fake money practicing, similar to using real money. This is a risk-free environment in which it's invaluable for testing strategies that you're learning and on the platform before committing your real money, right? Your real capital. Welcome to the video, guys. Like, share, subscribe. Let's get it out here. Let's help some other people learn this and let's grow together. Let's go. So basic option trading strategies you could use. So you want to start with straightforward strategies that allow you to build confidence while managing the risk effectively, right? So here are four fundamental approaches from that you could use in option trading. So you have buying calls. So it's mainly like a bullish strategy where you're purchasing call options when you believe a stock price will rise, right? Your profit potential is theoretically unlimited, so you could make an endless amount as the stock climbs, while your maximum loss is limited to the money that you paid or the premium you paid, right? Um, so it's best for upward conviction. So if you believe it's gonna go up, then you could do that. Next one is buying puts, right? So it's a bearish strategy. So you purchase put option when you anticipate a stock price will decline, right? Or you think that it's gonna go down, and you get this put option. Profit as prices falls. Um, with maximum loss cap at the premium or at the price, right? So you can only lose what you put in pretty much. Useful for portfolio protection or profiting from market downturns. So if market is going down, you can make money going down as well. So these are some strategies you could use. Next one is covert call. So this one is mainly used, you can use it for income generation. So if you own 100 shares of a stock, you can sell call options against them. So you could collect premium or money income while potentially selling your shares at a higher price. So conservative strategy popular. It's a conservative strategy popular among long-term investors, right? I mainly use puts and calls right now. So the next strategy is protective puts, right, or portfolio insurance. So you own stock and buy put option to limit down, down like. Let me move the phone over here. Yeah, there we go. So you to limit downside risks, right? So it's act like an insurance policy protecting against significant losses while maintaining upside potential, cost of the premium, but provides peace of mind. All right, like, share, subscribe, guys. Let's go. Let's get this video out there, help some people, and grow together. So managing risk, right? Managing risk. Um, So risk management separates successful traders from, those who lose a lot of money every time, right? So you want to discipline. This discipline is more critical than picking the right direction or timing the market perfectly. Protect your capital first, and profits will follow, right? Um, you want to implement things like stop loss orders. Um, you want to get good at position sizing, so don't overbuy position the amount of stock that you get, option contract you get. You want to accept total losses possibilities, and you want to continuous learning and review, you want to review your trades and learn from it and get better and better. So one of the rules is that the best trade is often the one you don't make, right? So patience and discipline is going to be consistently outperform being aggressive and emotional trading, right? There's some people who smash their computer, their mouses. Some people get upset. Some people cry. Some people yell. Um, some people some people realize they have greed. A lot of different things. When you trade option, you can realize about yourself. So you want to definitely have these things in place, so you could start, not trade emotionally, but trade strategically. Um, like, share, and subscribe, guys. Let's go. So, common mistake beginners make. You want to learn from others' mistake. Um, Learning from others' mistake is cheaper than making them yourself, right? So you want to learn some of these things so we could prevent these things, right? So trading without a plan, that's one mistake traders make. You just go in and you wing it and you like whatever I'm gonna make today. So you want to have a plan. Enter trades without clear entry points or exit strategies or profit targets is gambling. It's not really investing, right? So you want to have a clear area where you want to go. Successful traders define their thesis, what they believe is going to happen, risk tolerance, and exit criteria before clicking buy, right? So you want to determine where you're going to get it, where you're going to get in, where you're going to get out, and what if this happened, then this what's going to, and so on and so forth, right? So you're hoping for the best is not a strategy, right? You want to create a specific written plan for every trade. So if you want some help doing these kind of things, as I said, you could join the community. You could type community and you could get the link to join the community where you get support and learn more about things like this, option trading, personal finance, all these good things, crypto, all of these kind of things, right? Um, so with that being said, let's just continue. Like, share, and subscribe, guys. Let's live up together. Let's go. So ignoring time decay. So some beginner ignore time decay. So options lose value as expiration approaches. Um, uh, and this is called theta decay, right? So the theta, when it goes, it could decay and make your option contract lose a lot of money. The closer it is, the more you could lose. So some beginners often buy short dated option without understanding how rapidly time erodes their value, right? So, because most time it's a lot cheaper if you buy a closer date option contract. So even if you're directionally correct, right, time decay can destroy your profits, right? If the move doesn't happen quickly enough. So you definitely want to take that into consideration when you're trading option, right? Next mistake is over leveraging capital, right? The leverage option provides is seductive but dangerous, right? Risking too much of your portfolio on one or two trades can lead to a lot of loss, right? So many beginner trainer can blow up their account by going all in, right? All in or nothing, right? um, on top of on a like something they believe that's gonna happen or is gonna happen, whether they think it's gonna go up or down. So preserve your capital first. Don't go all in. All right, don't go all in, guys. Next mistake is chasing hot tips. So following strangers' recommendations, social media, or chat rooms, and without doing your own research is not good, right? You could lose a lot of money if you do things like that. So you want to make sure you do your own research. And again, guys, this is not financial. I'm not a financial advisor. I'm not giving you guys any suggestion what you should be doing. I'm not telling you what to do. I'm just providing this education, right? Like, share, and subscribe, guys. It's a level there. Let's go. So every guaranteed trade has risks, right? So develop your own analysis skills and investment thesis rather than blindly following others into positions you don't understand, right? So, so your next step to start trading options, right? You've learned some fundamentals thing. Now it's time to take action, right? So follow this roadmap to begin option trading journey with confidence and proper preparation. Like, share, and subscribe, guys. Let's live it together. Let's help educate some other people and grow together. Let's go. So you want to deepen your education, right? You want to explore free and paid resources from reputable brokerages, watch educational videos, things like this, and read beginner friendly books. That's going to help you learn this, right? You could also practice risk free. Spend one at least, a few weeks or months if you need it to paper trade with virtual money. So you're using fake money, and then test different strategies and learn the platform, how it works, and make mistakes. You can make mistake without financial consequences, right? Because you're losing fake money. Track your hypothetical performance honestly, and so on and so forth. So, the next thing is you want to start small and simple, right? Not a no. You wanna, when ready to real money, begin with tiny positions, right? Perhaps just one or two contracts. Focus on simple strategy like buying calls or puts on stocks you understand. Complexity can come later. Just focus on what you understand, right? Stay disciplined for long-term success, right? Review your trades weekly or daily, however you want to do. Adjust strategy based on results. If it works, it works. You keep rinse and repeat, and don't stop learning, right? You want to keep learning. Um, so it's not like a sprint. It's more like a marathon. So you want to keep going more consistent, and you want to have proper risk management so you can continue to, you know, beat the occasional, wins and so on. You want to have proper risk management. So, with that being said, guys, if you want to be in a community where you get support and learn things like this, get options, finance, all those good things, crypto, I'm sorry, all those good things, then you could type challenge if you want to get the invite, and let's go. So remember, guys, like, share, and subscribe. Let's level up together. Let's go. So option, as I said, guys, it can make a significant amount of money, and you could also, who's that? Demetria. A happy New Year, brother. Good to see you. Yes. So happy New Year. Same. Happy New Year. So option. Welcome to the video, guys. Yeah, happy. Let's go. So yeah, option have a lot of, you have a lot of upside where you can make a lot of money. You could lose a lot of money as well if you don't have proper risk management and some of the things that we discussed in this video. You could rewatch this video and take notes if you want to. You could also, as I said, join the community where you get resources like this, a written version and everything, PDF, and you could just get your copy of that. So with that being said, guys, remember to like, share, and subscribe. Um, let's level up together. Remember, for His glory. Peace. Let's go.